What's going on, everyone? Jeff back with another video. And so NIO reported earnings at market open this morning, and we initially seen a big jolt in the stock price, and then it proceeded to sell off for the rest of the day. So what I want to do in this video, guys, I want to back up to yesterday, quickly go through the earnings preview, then we're going to cover earnings. I think it was a very, very exciting quarter for NIO. We're going to talk about the movement of the stock a little bit, kind of analyze what happened today and why it happened, and then I'd like to answer the question, should you be selling your shares of NIO here in the $11 to $12, $13 range? I have seen a lot of that come up on social media today. I just think so many people do not understand the nature of earnings and then forward guidance, and also what is already priced into a stock already. Also, towards the end of the video, hang around because Tesla got some pretty big news at close today, and I would like to cover that. Also, if you're also a Tesla shareholder, there's a reason to hang in there to the end of the video. So let's just start here with their earnings preview, okay? This little tidbit was published on the 10th of August. We can go down here to where I'm highlighted, and it says the consensus EPS estimate was a negative 26 cents, and the consensus revenue estimate was $501.94 million. Okay, so that was the forward guidance from the previous quarter, and there was several revisions. These numbers actually come up through this last quarter. I think it's also important to mention this. Over the past 1 year, NIO has beaten EPS estimates 0% of the time, has beaten revenue estimates 100% of the time. So what does that tell me? They have gross and profit margin issues, okay? They're still having trouble getting their EPS up to where it needs to be. As you can see up here in the consensual EPS estimate at negative 26 cents, still not a profitable company yet. That does not mean that they're not growing very, very strongly though. And then over the last 3 months, EPS estimates have seen 6 upward revisions and 3 downward. Okay, revenue estimates have seen 9 upward revisions and 0 downward. So they are handling their business on revenue. They are beating on revenue almost every single quarter. I felt very confident about this earnings report just simply because delivery numbers had gotten so good. So from here, guys, we have a little bit of a preview. I want to go to the chart, show you some things, and then we're going to dive into the earnings report and try to figure out what happened today. So before we get started, make sure to drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. Alright, so today in pre-market, NIO stock was way up. Like I said, this was a very good earnings report. Just have to understand there was some profit taking here. I can just say from an investor standpoint, I'm sure there was some people that probably wanted to see that EPS number being positive, or at least a much larger beat than they actually had. And NIO was trading between $15 and $15.50 in pre-market, and pretty much from the time the market opened, it dived down. Around 10 a.m. was around $13.27, seen a little bit of a move back up, and then just continually sold off for the rest of the day. And if you look at this one-day chart, or even if you want to back up and look at a 1-week chart, you would say, oh, right here, they must have had a disappointing earnings call because the stock took a pretty good dive, you know? And from right here, I want to articulate one point with anybody watching the video, is that NIO actually had a really good earnings report and really strong guidance, but some of it is already priced into the stock. If you go here to 3 months, in 3 months time, you can see up here in the top left corner, they're up 258%. really since their last earnings call. In 1 year, they're up 333%, and just keep in mind there is periods of time, especially here in November and towards the middle of the year, where they were as low as $1.40 and $1.50. So NIO has come a tremendous way since that time. So do not take this like it was a bad earnings report. It just probably wasn't as good as some people were wanting or expecting. For example, if they would have blown EPS estimates out of the water, and maybe if they'd have beat revenue by $150 or $200 million, the stock would be due another huge jump in price. And right towards market open, it come out that NIO was zooming up 8% on an earnings beat. So the quarter two non-GAAP EPS of minus 15 cents or rather their GAAP EPS of minus 16 cents, that beat by 10 cents. So although NIO is not profitable yet, or they're not at a break-even point, they are certainly trending in the right direction, okay? And their revenue of $526.4 million beat by $24.46 million. So revenue numbers very, very good, 146.5% year over year. And we will be seeing some fundamental change. This is very important to stabilizing this company and stabilizing this stock. Really, you don't want as much volatility in this one, being recognized as more of a large component of the indexes. And right now they have about a $15 billion market cap, but their gross profit margin was 8.4%, where in a year ago, 2019, it was a negative 33%. So huge moves there. Fundamental changes are slowly starting to come to the surface. Good things are happening at this company right now. And again, we've probably already covered this in a different video, but I just want to re-emphasize that quarterly deliveries of the ES8 and the ES6 were 10,331. compared with 3,553 vehicles in Q2 of 2019. So if you look at that metric right there, almost 7,000 more vehicles were delivered in this quarter than 1 year ago. So if you're looking just directly at the stock price and you've seen it sell off after earnings today, you're not really reading the story here. It's actually a very, very exciting earnings call. Also, I do want to mention this, vehicle margins were at 9.7% versus negative 24% 1 year ago. And then even in Q1 of this year was negative 7.4%. So as you can see, things are trending towards profitability. And you know, it's like I've always said, strong deliveries and strong sales can pretty much overcome anything. If they keep this big trend up on their deliveries, you know, you can expect to see better and better numbers. This might have been the most exciting part of the earnings call for me personally, was the company's expectations for Q3. They are expecting to deliver between 11,000 and 11,500 vehicles. That would represent an increase of 129% to 139%. And total revenues to be between 572 million and 596 million. So again, they have guided up. They had good, strong earnings. They had very, very strong guidance, and the stock traded off 8% today. And that's kind of the point I want to make in this video. NIO had a little too much already priced into the stock. And like I said, if these numbers would have been massive beats on EPS and massive beats on revenue, maybe closer to $100 million and maybe an EPS beat of 25 or 30 cents, maybe 50 cents, you might have seen, you know, the stock make another move today. But for now, I'm very, very happy with the stock price. I think it is going to stabilize and might trade lower in the short term. But NIO is in a very, very good place. And remains a strong long-term investment. And briefly, let's talk about some of their top institutional holders. Let's talk about some of the big banks, big investment firms, and even some of the mutual funds that have very, very large positions in NIO stock. As you can see, Bailey Gifford and Company has over 100 million shares of NIO stock, representing a value of about $282 million. That was reported on March 30th, 2020. And Bailey Gifford and Company, they are out of the United Kingdom. Now, some of them you're going to see here more in the US, like right here, BlackRock Incorporated, they have 31 million shares. Vanguard, they have about 27 million shares. Morgan Stanley, another American bank, another investment firm, around 15 million shares. State Street Corporation. Take a quick look at some of the mutual fund holders. Vanguard owns a lot of this company. Like I said, right here, we've seen Vanguard's holding was around 27 million shares. And they have them spread across, you know, 3 different indexes: the Vanguard International Growth Fund, Vanguard International Stock Index Total International Stock, and their Emerging Market Stock. So Vanguard has a very, very large holding of NIO. The iShares also have a pretty large holding, around 5 million shares and 2 million shares. Invesco, of course, Bailey Gifford International Growth Fund, and the iShares MSCI of China ETF. And I do not have any holdings in that. They have around 1 million shares of NIO right now. So none of these companies and none of these mutual funds are selling any positions right now. As a matter of fact, they keep adding to it on any dip. And in my opinion, as an investor, you should probably continue to do the same. Now, Tesla actually got some news right at close. It's not really news that is going to affect the company so much as it does investors. Let's go check that out real quick. Tesla announced a 5-for-1 stock split, okay? And Tesla is currently trading around $1,374. However, on the news of the stock split, it actually run about 6 to 7%. In over $89 a share, and after hours is trading at $1,464. And pretty much anybody watching this video knows Tesla and NIO are fierce competitors with one another. You know, what I've always suggested is to own both, bet on both horses, and hope they both win the race. A lot of people feel very strongly they're only going to invest in one or the other. That stock split is going to go into effect after the close of trading on August 31st. And in theory, what this means, basically why companies split their stock back, is so smaller investors can afford the stock, where this really doesn't affect institutions very much. However, I even have a theory about that, is that with most brokers now, and a lot of brokers offering fractional share buying like M1 Finance, Robinhood, SoFi Invest, several others, you know, there's really no benefit to splitting the stock. Other than that, it just generates some excitement. I kind of look at it like a small artificial boost in stock price for Tesla. Like I said, it doesn't really change anything. Reasons. So that's all I got for the video, guys. Make sure to go down to the comments, share your thoughts and opinions on this last earnings report and forward guidance that NIO put out. I always enjoy hearing that kind of thing. Thank you as always for watching the video, and have a great day.